All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Wednesday, September 21st, 2017. Interesting day yesterday, volatile day yesterday, especially after the Fed. And I wasn't really expecting that because we've had some pretty benign reactions lately. Today, the market's flat this morning, VIX up slightly. The market pretty much break even at this point. Oil is pulling back after breaking out. But we had an initial poor reaction to the Fed. I'm on the intraday chart today. And I don't usually talk too much about day trading, but I want to point this out again. We always do this around the Fed. Here's a 5-minute chart. You can see that initial really bad reaction, and then what we call the Fed fade. This almost works like clockwork, where that whatever that initial move is of that Fed, we often get a reaction the other way, and we got a really strong reaction the other way. On a lot of our charts, you're going to see these tails that have formed because of that. So there's a little fear going into it, then bam, the move down after the Fed release, and then the recovery. Sometimes you get a little bounce, and then it continues down that way, but you almost always do get this Fed fade play, so that you day traders put this on your repertoire for things to do every time there's a Fed meeting if there's a strong reaction. Now getting back to our focus on the daily, you can see what that caused was a big tail in the market here, a hammer. So it looked like pretty scary. VIX started popping, market started going down, but then we held the 9 and are back up to the highs here. So just what we want to see. So everything is looking good. The Qs did not handle it quite as well. It didn't get back to green, but still got that big hammer, was testing the 50, came all the way up back close to the 9. We're essentially opening right around the close this morning. Now we want to see a continuation off these hammers. If they hang out too much at this kind of hammer level, they'll often kind of roll over. So we want to see, by the end of the week, a move towards the highs. And then IWM never really did even get hit because oil was strong and commodities were strong. Financials did pretty well. So it didn't get hit quite as hard. And you can see financials here almost putting in the same pattern. Didn't get hit quite as hard. Did pull back some, but not quite as bad because interest rates don't really affect financials in that way. Actually, higher interest rates sometimes impact the financials positively. So XLF strong. Let's look at current positions really quick. Netflix here. You can see the hammer here and then pulled back strong right back to where we entered. Facebook, same thing, started to slide down. We're still at 72. Entry was 168. We just need, again, that little push to get to our target. We've been waiting for that little push, and hopefully we get that here. Now, FSLR, this one has been a frustrating stock. Got down testing the 50, 47. I just decided that this was, that was the end of it. Very small loss, not even a regular sized loss. It was just more the time factor. It's been a pain holding this thing. And of course, when we got out, it reacted around the Fed and closed back up over the 9. So maybe it bounces at this point, but we're out of this one. And then Race also started to pull back above the entry level nicely here, 113. We want, again, that push now towards the gap fill around 116, and that would hit our target level. Now EWZ, Brazil was starting to get hit and then put in the same pattern the US markets did. So still looking strong, still at the top of our list. Same goes for China. China was getting hit and is back up. So we're going to watch BABA closely. BABA did not recover like some of the other ones did. Baidu did somewhat here. So we're still watching Baidu and BABA. We're still watching BRZU for a potential entry. That's going to be just like EWZ. X, we're starting to look at commodities. We're wanting to see the break of the key levels. X was green yesterday, up 0.5%, but did not break that level. FCX never really recovered, so we'll keep an eye on it, but a little disappointing there. And Cenex was very strong, aluminum, so we'll keep an eye out on that. Cybersecurity, still strong. Cyber here, holding that 50-day moving average. And then Faye did not really recover yesterday, but holding that 9. So we're going to watch those two very carefully. Now, we started the week really paying attention to retail, and retail has been mixed. Macy's has pulled back. Coal's kind of this weird pattern here that doesn't really allow us to enter, but guess still looking strong at the 9. And then Gap also, keep getting Gap's ticker wrong. There we go. Holding up nicely. So we're watching those two retails as well as Amazon, which we want to get up over the 50-day moving average. LABU, biotech, let's get to XBI. Strong yesterday, even when the market pulled back. XBI did pull back, but not below. It never got red, so that was good. And it closed at the highs. We're still at the top of this range, so I didn't enter. And then also remember with the Fed, sometimes it takes a few days for the market to really shake out, and there might be a couple of volatile days. But LABU, very high on the list. So what I'm really looking at today is Cyber, LABU, BABA, BRZU for Brazil, and potentially NVIDIA here as well, although a really tight consolidation range. And I want to see a pattern really develop here. But maybe instead of that, I could use SOX L instead, which is the semiconductor ETF, which put in a really strong tail here, 4 points, although I would have liked it to close higher. So we need it to kind of confirm what we're seeing here. And then there was a big runner yesterday, ALNY, that in biotech that has a lot of short interest. This thing could pop for a few days. At that point, I would look to short it. Another short that I'm watching is SQM here. Chemical stock putting in a bearish engulfing after this huge run from 35 to 60. So that's it for the trade report today. Potentially adding a entry today, although I will be cautious. We've got a few positions here already, and we want to see how things shake out.